Hey everybody, welcome back to the channel. We've got a lot to talk about on today's episode of Daily Palantir. On today's show, Alex Karp gives a new interview on Fox Business. This interview was actually based on the Fujitsu partnership that we talked about last week, and right after I uploaded that video, 20 minutes later, the interview came out. So we're going to talk about that interview and some gems that Karp drops, which is kind of giving us a hint of what Q4 might entail for Palantir. Number two, Louis De Palma, the guy who put out the analyst report last week, basically saying Palantir's moat in the government space is being threatened. The army had to clarify their comments that they gave to Louis De Palma because that's how much he wasn't necessarily portraying it correctly. Shyam Sankar tweeted publicly about some of that, so we're going to talk about that. And then finally, we know some of the big funds that are selling Palantir now. One of the largest pension funds in the world has sold 111,000 shares of Palantir. We'll be discussing all of that on today's show. Let's get into it. All right, so first thing I want to discuss is Karp's latest interview. Now, this interview was very important for a variety of reasons. One of the main reasons was because Karp talks about the demand for AIP, Palantir's artificial intelligence platform, and what they're doing to keep up with that demand and why that demand is starting to get stronger. So I'm going to play a little bit of this interview. It's an 11-minute interview, not going to play all 11 minutes, but this is Karp speaking with in partnership with Fujitsu in Japan, talking about the partnership and also talking about why they are doing basically system integrators to help them distribute AIP all across the world, Japan being another client that they're going to be able to do this for as well. So let's take a look at this and then we'll go from there.
New $40 million deal to its slew of recent partnerships. It's hitting the tape right now. The 168% gains in Palantir shares this year reflect a bunch of multinational deals the company has made, and now there is a brand new one with Japanese IT provider Fujitsu that aims to broaden their current tie-up benefits here to the U.S. Joining us now in a Fox Business exclusive is Palantir CEO Alex Karp and Fujitsu Global Tech Lead Yoshinami Takahashi. Great to have you both. Alex, I'll start with you. Palantir and Fujitsu have been collaborating since 2020 on Fujitsu's enterprise digital transformation business. What about this new deal? What does it accomplish? How does it fit with the U.S.?
Well, Fujitsu is one of the most competent engineering organizations in the world. Palantir, we just can't keep up with our product demand. We looked for and found ideal partners for our services. We are just breaking at the seams in the U.S., and they are going to help us grow even more rapidly for providing their very, very competent services to the U.S. market while we are able to scale our product. And that just, it's a very big issue for us. Demand for AIP has been unprecedented. We built aspects for enterprise AI that are unique. The market's beginning to recognize it, and we need help, and they're helping us, and they're very competent. We like working with them.
So real quick, before we continue with the interview, that is the part that I want to discuss after this clip is over. That's a big deal, right? Karp basically saying, look, we have unprecedented demand for AIP. We cannot keep up with demand. In Q3, Karp talked about how demand really was not a function of not having the dollars to be able to keep up with it, but rather because of their bootcamp strategy, there wasn't the essentially talent to the forward deployed engineers to be able to execute the boot camps at scale to be able to keep up with all the demand. So this is really interesting to talk about or to understand why they're getting so much demand. And it's kind of playing to the thesis of what Shyam was talking about last week on his interview with CNBC, saying that they've fundamentally ramped up their go-to-market approach with boot camps, now doing about 325 organizations getting boot camps towards the end of 2023. That's going to ramp up likely dramatically going into 2024 if they keep scaling boot camps even 10% month over month. And the conversion on those boot camps is leading to more demand. So if they're getting unprecedented demand, more inbound than they can handle for enterprise AI that Karp says they have unique aspects to that the market's finally starting to realize, then the question becomes, is that going to show up in the Q4 numbers, or is that going to sort of wait longer until it can finally be monetized, even if the customer count is going to go up? And we're going to talk about that in a second.
Takahashi-san, Fujitsu has an AI lab, I know, working on the development of LLMs or large language models, but so are many of your global rivals. How does this particular deal with Palantir, how is it going to position you in that race? And when you say you're working together to solve societal challenges, can you just give us some granularity about that?
Yeah, sure. Thank you, Liz. One of the things we want to achieve by 2025 is to kind of provide all the enterprise customer, but also the government around the business proposition that will resolve the society issue. Either it may be like a CO2 suppression, not only like articulation of the CO2 emission itself, but using Palantir's technology coupled with Fujitsu's IP it's more about like not articulation of CO2 itself, but how do we suppress the CO2? Also like supply chain efficiency. Through our AI and Palantir's data aggregation technology, we think there's a big impact that we can bring together, not only into Japanese market, but also like the US market. Our aim to kind of, through this partnership, the business scope is around over $5 billion. And again, Palantir technology is going to play a vital role in making sure that we use the technology, incorporate it into our solution, and provide to the customer.
All right, so that's kind of the main stuff I wanted to show. Essentially, Palantir is using, or Palantir is going to be adopted by Fujitsu Japan, which is a technology consulting firm. They have their own proprietary platforms built on Foundry. Now, a lot of their clients are like, hey, we want to leverage large language models. Palantir is like, well, AIP is the tool, the infrastructure to allow you to leverage those LLMs. And so that's why this partnership is being extended. And this $40 million partnership is, well, the extension of this partnership that they started in 2020 is now worth another $40 million. Two key takeaways from this. Palantir expanding to international commercial clients with AIP. They're using third-party system integrators, technology consulting firms like Fujitsu to help them do this. Very important for them to expand that international commercial revenue. International commercial and international government, quite frankly, sucks. The growth has not been there. U.S. commercial is what is really the only reason why Palantir has even achieved profitability on top of the net interest income they're getting from the cash they have in treasury. So that has allowed them to maintain profitability. But if you want to really accelerate profitability and accentuate it in this market that you're trying to capture, international commercial has to grow. Japan is a great place for that to happen. And so I think that would be really good for Palantir to expand in. Number two is, again, AIP demand. So in the context of Q4 numbers, I'm a bit skeptical here that Palantir's unprecedented demand would lead to so much clientele that it would lead to monetization in Q4. I think they guided for like $604 million of revenue, which would be somewhat between 18 and 19% year-over-year growth. If they smashed it out of the park, it would be because of AIP demand translating to revenue. The only reason I'm skeptical of that going into Q4 and why I would be a little cautious of betting that Q4 is going to be a monster, Q4, which is going to end in about 20 days now, in the end of December, is because a lot of the clientele they're getting are on pilots and they're affirming them as customers and they might be selling them Foundry to be able to help them get into AIP, but that doesn't mean they're monetizing AIP. I think right now Palantir is doing on average $2.9 million per customer. AIP growth would allow that to be $3.5, $3.6 million based on how they price it. And I don't think they've fully figured out how to monetize AIP yet. I mean, they've said that their focus is on getting customers, giving the stuff for free, and eventually monetizing it. They will monetize it. That will happen. I just don't know if that's Q4. The other side to this is maybe they are monetizing the crap out of this, and that's why Karp is so excited talking about we have unprecedented demand, because he's saying to investors, hey, like this is legit right now. This is not a joke, and you guys are going to see it soon. I have no idea. That's why it's really hard to time this. This is why you kind of buy and hold for the long term when it comes to the stock. But in general, it is very nice to see that Q4 demand is there, and Q4 demand hopefully is going to be able to accelerate going into 2024 if this bootcamp strategy continues to scale for AIP. Now, real quickly, on to this argument about demand. I want to showcase why demand is so strong for Palantir. Here is a part of last week's Daily Palantir newsletter. I think this was Thursday's edition. By the way, if you have not subscribed, please subscribe. DailyPalantir.com/subscribe. It is free. Newsletter every single day. Takes you 5-6 minutes to read. If you're a Palantir investor, there is no reason you are not subscribed to this. Please, please, please subscribe. DailyPalantir.com/subscribe. Okay, so Snowflake put this out on LinkedIn. Elevate your skills with part 1 of our LLM Bootcamp and join us over 2 days to delve into the world of generative AI on Snowflake. The reason this was really interesting is because, the analysis that I wrote is that Snowflake is now doing LLM bootcamps in order to acquire customers. Snowflake has always had an amazing sales force because that's the nature of their business, but Palantir's go-to-market strategy has revolved around these bootcamps for the past few months. I think for Snowflake to copy this, which, if you're going to call it a bootcamp, I'm sorry, you're copying this. Palantir coined the term. Like they didn't literally come up with the term bootcamp, but I haven't seen any SaaS company, actually deploying that term and branding it at scale. For them to copy it means that they're seeing how strong a strategy like this is and what it can do to entice potential leads to turn to customers since they are getting hands-on experience with their own data in a workable product. Having said that, I believe Palantir's AIP is beyond most platforms in the market because Palantir is working on it for years, attaches to an ontology, and has data governance at the highest of levels. If Karp is saying that demand is unprecedented, my question simply now is going to be around what happens in Q4 with that demand. But seeing a company like Snowflake say, hey, we're going to try to copy this approach, we're going to try to leverage what Palantir is doing with a go-to-market strategy that is focused on the product. If Snowflake's trying to do that, and by the way, Snowflake has had declining growth over the past, like 7 quarters because they were growing at pretty high rates, right? And now they're coming down to the mid 30s, which is still great, but it is declining growth. You would argue that they're trying to find other avenues to be able to grow, and Bootcamps might be a way, and they might be seeing how successful it is with Palantir. All of this to say is that if your competitors are recognizing that your go-to-market strategy is working, and then you got Karp saying we're getting unprecedented demand, you put 2 and 2 together, those competitors might say, hey, we need to copy this strategy because we can't let Palantir get away with it. You know, given Palantir is really getting away with not having a real sales force, but using their product to sell their product in a boot. Like, it's honest, it's the most Palantir thing ever. You don't have to hire a fancy sales force. You don't have to spend a crap ton of sales and marketing expenses on selling. You just show your product to customers and like, yeah, it's a really good product. And you pay a little bit for a boot camp, and then customers are like, yeah, we're going to buy it. You know, it's the most Palantir thing ever. It's the most Alex Karp thing ever. And I don't think Palantir's competitors are necessarily happy with that. But it goes to show why the bootcamp strategy is likely working and why that's increasing AIP demand. Okay, next thing we're going to talk about is Shyam Sankar, who put out a tweet this weekend that I thought was really interesting, or actually was on Friday, basically clarifying what Louis De Palma said. So here is the tweet. For those that are unfamiliar, Louis De Palma basically said, he's one of the analysts on Palantir, basically said, look, Palantir is not going to get a higher Army Vantage contract, which they got for about $450 million back in 2019, because the government wants new open source technology. Therefore, Palantir is at risk of getting an additional contract, and that's what kind of tanked the stock 6%, because that deal basically said Palantir's government moat is starting to decline. Shyam Sankar tweets, and the U.S. Army has corrected the record that Louis De Palma got wrong. Again, to call out an analyst by name is a very big deal. Usually these top C-suite executives, they don't care about analysts. They're not trying to call out analysts by names. They're not trying to have an antagonistic relationship with analysts. Shyam Sankar said, no, bro, we really got to call you out because you messed up big time on this, and that's a very big deal. Rafty offered additional context regarding his remarks on data ownership, which is one of the generals in the U.S. Army. To clarify my remarks last week, our concern about data ownership rights is directed at the entire defense technology community regarding the Army's expectations of industry and will inform future data requirements across several programs. To be clear, we're satisfied with the Army Vantage program, its IP contract language, its open data environment to facilitate Army collaboration, and its connection with third-party tools. Why does this matter? Louis De Palma went out on public and said the Army is not satisfied with the contract they had with Palantir. They want more open source technology. And as a result of that, Palantir is likely not going to get these future government contracts that they've been able to get in the past. Shyam Sankar tweeted this article by the Army. I'm assuming Palantir contacted the Army and said, hey, can you clarify this? Because the entire market's in a frenzy because Louis De Palma said something that we know is likely not accurate. And then the Army said, actually, yeah, Louis, you're not accurate. They're saying our remarks were not targeted at Palantir. Our remarks are targeted at the entire infrastructure of the defense technology community. And that means that if Palantir is likely not getting a deal or could suffer from different types of deals, other government vendors are also not getting it. The reason Palantir tanked is because the argument from the street was, okay, so if Palantir is not getting this deal, then other vendors are going to get it that are more open source, which doesn't make any sense because you would have to, this is what I said last week, you would have to assume that those open source technologies are far superior and better, and that the entire government procurement process has changed in order to be able to assume that open source versus closed source projects are better. That's a gross overgeneralization. It's a very big stretch. And as a result of that, the entire Louis De Palma research note from William Blair just didn't make any sense. It just felt like there was an agenda attached to it because it was such a stretch on arguing why Palantir was, supposedly not getting any more government contracts or losing its moat in the government space to be able to assume that, which is why the Army clarified. And then when they say, to be clear, we're satisfied with the Army Vantage program, its IP contract language, its open data environment to facilitate Army collaboration, and its connection with third-party tools, they're essentially saying we are fine with working with Palantir. We have worked with Palantir for a long time. We are totally satisfied with what's going on. And if things change in the future, things change in the future. But as of now, you cannot say that Palantir's procurement process or the way we procured Palantir software is necessarily bad. I'm getting to the point where Louis De Palma is an analyst on Palantir that is hard to be trusted. He may be right that Palantir doesn't get the same amount of dollars that they got in 2019 for the Army Vantage contract. But as I said last week, that could be for a variety of factors. The idea that you hear one thing and then cherry pick it at a presentation from the Army and then extrapolate it into an entire report, and then the Army has to come out and a C-suite executive from Palantir has to call you out by name to correct your comments on what the Army said, is pretty it looks bad as an analyst. I mean, if you're a Wall Street analyst, for that to happen to you, that does not look good. So Louis De Palma at this point, he's had a very bearish price target on Palantir. He's been very bearish to the company for a long time. His arguments have never been that rational to me. Other bears on Palantir, at least I can see some of the logic behind their argument, whether it's about growth, whether it's about AIP not necessarily having a moat, and I can argue those things, but I can at least understand their logic because they're trying to make a coherent argument. Louis De Palma has consistently shown he doesn't really understand Palantir, and his arguments for price targets that are, substantially lower than they are right now are not really that good. So I would really take it with a grain of salt when he says something. He's losing a lot of his credibility. And that's not to criticize him and call him out. That's just to say, like, dude, if the C-suite at Palantir has to call you out on Twitter because your report was that bad, even if some of your logic may be correct, but the way you framed it is so god awful, you really got to think twice when you talk about Palantir next time, because it's going to be hard for people to treat you and to give you any credibility. So, Shyam Sankar corrects Louis DePalma. We'll see if Palantir continues to get an Army Vantage contract and how that expands in the future. But as of now, it's safe to assume that the government is not singling out Palantir in whatever report Louis DePalma wrote. It's rather they have an entire approach to defense technology that will change in the future, or they are satisfied with Palantir software and nothing's necessarily going to change. We'll see. We'll find out. But for Louis DePalma to do what he did and take his words and then just mush them together and tank the stock 6%, it also goes to show how deeply Wall Street cares about these analyst reports and how much power they have, but also how wrong they could be and how that could present opportunities to people when they put out something that's nonsense. And, that gives people better opportunities to get entry prices into the stock. So Shyam Sankar corrects Louis DePalma. Okay, last quick thing that I wanted to show on today. We do have a new Barron's article that shows a pension fund that sold out of Palantir. So we got some new arguments or some new analysis on who is selling Palantir. We've been trying to figure out what institutions have been selling. Canada's Public Sector Pension Investment Board, which is one of the largest pensions in the world, has exited an investment in data analytics firm Palantir, and they slashed their position in AT&T, and they bought Intel and NVIDIA. So this is a form that they filed recently. Palantir obviously up 150% for the first time in 9 months this year. Shares are up 11% so far in the fourth quarter. They ended up selling, if I get it right here, 111,000. There we go. Sold all the 111,432 Palantir shares that it owned at the end of June. Palantir obviously reporting strong earnings this year, bolstered by growing demand for its AIP platform. So nothing too crazy here. Just wanted to give an update on a fund that has sold 111,000 shares is a decent amount of shares from a fund. This is one of the largest funds in the world, so it's not a small fund. The reason they sold, honestly, I think Intel is a little bit more of a safer bet than Palantir. If you just think about the dividend and in general, Intel being more stable, not expected to have massive growth like a company like Palantir. Palantir up almost 150, 180% year to date. That's where people are like, well, if you got in at the bottom, you're up 180%. If you're a pension fund, you should probably take some of those profits, allocate it to somewhere more safer, getting a good dividend versus hope that growth continues. And that's just the nature of how some of these pension funds work. And as a result, they sold. I'm assuming we'll see more institutions that are selling towards the end of December because they're going to take their profits or they're going to tax loss harvest. With Palantir, most institutions are up for the year, so they're likely not tax loss harvesting that much, but they're just, going to take their profits, take their gains, and then allocate it to other areas. And that might see some more sell side pressure on the stock. We saw the stock go down to the low 17s. I was obviously buying in the low 17s. Right now, Palantir, as of recording this in the pre-market, is at 17.96, up 1%. It's 8:30 a.m. They did hit $18 in the pre-market, so we can see it teetering around this $18 range, $17 range, but as of now, it's been stable here, down from that $21 range where it ran up very high, and so we're seeing it down to $17, $18, and we'll see where it goes from there. All right, that's it for me. Thank you guys so much for listening and watching. Please subscribe to dailypalantir.com/subscribe, dailypalantir.substack.com. Substack newsletter comes out every day towards the end of the day, and I think you guys will enjoy a news roundup of all the news around Palantir. It takes 5-6 minutes to read if you want to read that versus watch these videos, or if you want to watch the videos and read both, because why not? You got to get your news of Palantir every single day. Thank you guys so much for listening and watching. Let me know in the comments what you think about Alex Karp's new interview and Shyam Sankar calling out Louis DePalma by name. I'll see you guys on the next one.